What is happening, crypto fam? Get ready for an absolute whirlwind of updates because the market is absolutely electric right now. We've got seismic shifts, incredible rallies, and strategic moves that you absolutely cannot afford to miss. The pace is blistering, the action is nonstop, and if you're not plugged in, you're missing out on the biggest conversations happening in the digital asset space. We're diving deep into the forces driving massive price action, uncovering how major players are positioning themselves, and dissecting the technicals that could signal the next big move. Bitcoin is staging a remarkable comeback, breaking through a significant downtrend and rallying back above $111,000. We'll break down what's behind the surge and if it's a sign of a bigger trend reversal. This is your essential briefing, your front row seat to the future of finance, and we're bringing it to you live. While Bitcoin consolidates, the altcoin market is absolutely on fire, with some major players seeing massive gains. We're talking about Ether and Solana leading the charge, find out why they're outperforming, and what this means for the broader market. But hold on, because even with the positive momentum, there are whispers of caution. Analysts are sounding the alarm, warning that Bitcoin might still be in a fragile zone and could retest the $100,000 mark. We'll explore the technical indicators and market signals that suggest this potential pullback and what it means for your strategy. And in a move that's reshaping the landscape, American Bitcoin has officially landed on the Nasdaq. This isn't just another listing, it's a strategic play to build America's Bitcoin infrastructure. We'll unpack what this debut means for institutional adoption and the future of Bitcoin in the traditional financial world. Get ready for all this and more. Don't forget to smash that like button, subscribe to the channel, and ring that notification bell so you never miss an update. The Bitcoin surge. What's driving the rally above $111K? Bitcoin has once again captured the market's attention, staging a significant recovery and soaring above the $111,000 mark. This impressive upward movement comes after the world's largest digital asset broke free from a 2-week downtrend that had been exerting pressure since mid-August. Trading at approximately $111,533 on Wednesday afternoon, Bitcoin demonstrated a gain of over 4% across recent trading sessions. This resurgence brings the cryptocurrency back into a crucial support zone, nestled between $110,000 and $111,000, an area previously identified as significant in earlier technical analyses due to its history as a point of previous highs in May and June. Technical indicators are flashing green, suggesting that the recent downward pressure might be losing its grip. Bitcoin's ability to close above a key descending trend line on Tuesday, the first time since August 13th, is being interpreted by many traders as a strong signal of a potential trend reversal. Further bolstering this optimistic outlook, the cryptocurrency's Relative Strength Index, RSI, has exhibited bullish divergence patterns, a classic indicator that often precedes price recoveries in technical charting. Market observers are pointing to a notable shift in the behavior of large Bitcoin holders, often referred to as whales, as a primary driver behind this recent price action. According to Paul Howard of Winsent, a period where substantial capital rotated from Bitcoin to Ethereum appears to be concluding. Howard stated, "The whale rotation from Bitcoin BTC to Ethereum ETH that took BTC below $110,000 has taken a pause and most likely is almost complete now. What I expect we see is a gradual grind higher with institutional flows coming back into BTC." This narrative of returning institutional interest is particularly compelling, especially as Bitcoin exchange-traded funds, ETFs, continue to attract substantial capital inflows, even amidst recent market volatility. Market participants are keenly observing for any signs of renewed institutional buying, which was instrumental in propelling Bitcoin to its previous record, highs above $124,000 just last month. Further analysis of trading data reveals the formation of significant liquidation clusters positioned above current price levels. Approximately $90 million worth of short positions are vulnerable to liquidation near the $112,200 mark, indicating that a continued upward trajectory for Bitcoin could trigger substantial buying pressure as these positions are closed out. Historically, September has presented challenges for Bitcoin, often characterized by weaker price performance compared to other months. However, the current year's market dynamics include several factors that could potentially disrupt these typical seasonal patterns. Howard acknowledges this historical trend, but believes it could surprise by month-end given institutional interest and the consistent volumes we are seeing from OTC buyers this week. Jamie Elkill, Chief Marketing Officer at BitGet Wallet, echoes this sentiment, noting the complexity of the current environment. September has historically been a weak month for Bitcoin, and this year's decline keeps that pattern intact, Elkill commented. Yet, the backdrop is more complex. A Fed rate cut now seen as highly probable could drive liquidity into crypto, even as rising gold and equities compete for flows. The approval of Bitcoin ETFs and policy tailwinds under the Trump administration could provide institutional support, but tariff impacts and regulatory developments remain critical swing factors. Federal Reserve policy expectations add another layer to this intricate market scenario. With the probability of interest rate cuts increasing, some analysts anticipate a surge in liquidity flowing into risk assets, including cryptocurrencies. This influx of capital could provide a significant tailwind for Bitcoin and the broader crypto market. But is this rally sustainable, or are we just seeing a temporary reprieve? Stay tuned as we dive into the altcoin outperformance that's currently shaking up the market. Altcoin frenzy. Bitcoin lags as Ether and Solana shine. While Bitcoin navigates the crucial $111,000 level, experiencing a period of consolidation, the broader cryptocurrency market is witnessing a significant shift in momentum, with altcoins dramatically outperforming. Bitcoin has been trading in a tight range around $111,000, having seen a slight dip of 2.9% in its value over the past 30 days. This relative stagnation is mirrored in its market dominance, which has slipped from 61% to 57% during the same period. This decline in Bitcoin's dominance is a classic indicator of a bullish sentiment spreading across the altcoin market, as capital begins to flow into smaller-cap digital assets. This trend is vividly illustrated by the performance of major altcoins like Ether, ETH, and Solana SOL. Ether has seen a notable uptick, gaining 1.1% since midnight UTC and an impressive 21% over the last 30 days. Solana has also shown strong upward momentum, trading 0.43% higher since midnight and boasting a remarkable 27.5% gain over the past month. These figures highlight a clear rotation from Bitcoin into these leading altcoins, driven by a combination of factors including growing institutional interest and anticipation of network upgrades. The broader market sentiment is further captured by the Bitcoin Bulletin 20 Index, a comprehensive measure of the market's overall health. This index has gained 0.46% since midnight and shows a 1.7% increase over the last 24 hours, with all its constituent assets posting gains in the latter period. This broad-based positive movement across various digital assets underscores a general market uptrend, with altcoins currently being the primary beneficiaries. Adding to the bullish narrative for Ether, Nick Forster, founder of the on-chain options platform Derive, Zeiss, has projected a strong future for ETH. He estimates a 44% probability that Ether will reach the $6,000 mark before the end of 2025. Forster elaborated on the driving forces behind this optimistic outlook, stating, "Institutional adoption of ETH is building serious momentum." Last week alone, the number of ETH held by ETFs rose by 250K, from 6.5 million to 6.74 million. This influx of institutional capital into Ethereum, particularly through ETFs, signals a growing acceptance and demand for ETH as a legitimate investment asset, potentially paving the way for significant price appreciation. The current market dynamic, where altcoins are stealing the spotlight from Bitcoin, suggests a maturing cryptocurrency ecosystem. Investors are increasingly seeking diversification and higher potential returns, which altcoins often provide. The The strategies employed by crypto treasury companies, which are increasingly adopting altcoin accumulation, further validate this trend. As Bitcoin consolidates, the focus shifts to these altcoins, which are currently offering more explosive growth potential, making it a crucial time for investors to monitor these rapidly evolving market conditions. While altcoins are soaring, could a looming retest of $100,000 for Bitcoin dampen the overall mood? We're breaking down the cautionary signals and analyzing the fragile zones that traders are watching closely. Bitcoin's precarious position. Analysts warn of $100K retest. Despite a recent rally pushing Bitcoin above the $110,000 mark, a significant segment of market analysts is urging caution, warning that the current price structure leaves the door open for a potential retest of the $100,000 level. Popular crypto analyst Ali Martinez highlighted on X that Bitcoin has just encountered the upper boundary of its established downward channel, currently acting as a resistance point at approximately $110,700. Martinez's analysis suggests that multiple rejections at this critical level could indicate that bearish forces still hold sway in the market. Should momentum falter, he has identified potential downside targets around $107,200, with a more conservative estimate extending to $103,000. Bitcoin has been navigating a pronounced compression phase since achieving its peak of $124,500 on August 14th. The market entered what is being termed a fragility zone once Bitcoin's price dipped below $112,000, and a subsequent breakdown below the $110,000 threshold significantly heightened the perceived risk. However, the current price action, characterized by the bounce above $110,000, suggests this compression phase might be starting to break down. Data shared by Bitcoin Vector provides a nuanced view of the current market health, indicating that only about 9% of the total Bitcoin supply is currently held at a loss. This figure is notably distant from the severe capitulation levels observed in previous bear markets, suggesting a degree of resilience among holders. The risk-off signal, which had previously spiked amid heightened volatility, is now showing signs of easing, retreating towards a low-risk regime. This cooling trend implies that while downside risks persist, the market has not yet succumbed to widespread panic selling. Another element contributing to a potentially bullish outlook is the consistent increase in stablecoin reserves held on major exchanges like Binance, when measured against Bitcoin's overall market capitalization. This trend typically signifies available capital on the sidelines, ready to be deployed for purchasing Bitcoin, which could fuel further upward price movement. At the time of reporting, Bitcoin was trading around $111,400, reflecting a 1% increase on the day. The cryptocurrency has experienced substantial price volatility throughout the week, including a dip to as low as $107,300 on Monday. Analysts generally agree that while short-term holders might still be under pressure, the long-term outlook for Bitcoin remains bullish. For the immediate future, traders are closely monitoring the support range between $107,000 and $105,000, levels that previously acted as a significant bounce point earlier in the week. A decisive breach below this range could trigger more substantial corrections, whereas a sustained recovery and consolidation above the $110,700 resistance level would provide a stronger signal of bullish control. Amidst this price stabilization effort by Bitcoin, a new project named Bitcoin Hyper, is generating considerable excitement within its pre-sale phase. The project has already secured $13.6 million in pre-sale funding and aims to address some of Bitcoin's most persistent challenges, namely slow transaction speeds, high fees, and the absence of native smart contract functionality. The Hyper token is central to its ecosystem, serving as the utility asset that powers the network. The current pre-sale price for Hyper is set at 0.012845, offering early investors an opportunity for a discounted entry before the next price adjustment. With Bitcoin navigating these critical levels, a major player has just made its grand entrance onto the public stage. We're talking about American Bitcoin's debut on the Nasdaq. Find out what this means for the future of Bitcoin infrastructure. American Bitcoin lists on Nasdaq, aiming to build U.S. infrastructure. In a significant move for the cryptocurrency and traditional finance sectors, American Bitcoin Corp has officially debuted on the Nasdaq Stock Exchange under the ticker symbol ABTC. This milestone follows the completion of its stock-for-stock merger with Griffin Digital Mining. The company positions itself as a specialized platform dedicated to Bitcoin accumulation, with a stated mission to construct the foundational infrastructure for Bitcoin within the United States. This strategic entry into public markets offers a unique investment vehicle that combines direct Bitcoin mining operations with opportunistic market purchases, backed by the robust infrastructure of Hut 8 Corp. As a majority-owned subsidiary of Hut 8 Corp., Nasdaq TSX, Hut, American Bitcoin leverages its parent company's extensive infrastructure and advanced ASIC technology to conduct Bitcoin mining operations efficiently. This relationship allows ABTC to maintain operational cost advantages through shared services and access to existing infrastructure, a model that aims to optimize capital deployment towards mining capacity and Bitcoin accumulation. The company's dual strategy differentiates it from pure-play Bitcoin holders or mining firms by offering a flexible approach that can adapt to market conditions, potentially allowing for Bitcoin mining at costs below prevailing market prices. The introduction of ABTC on the Nasdaq provides institutional investors with a novel avenue to gain exposure to Bitcoin through conventional financial structures. This is expected to broaden the accessibility of cryptocurrency investments to a wider range of mainstream financial participants. The company emphasizes a focus on Bitcoin per share growth, indicating that its success will be measured not solely by traditional fiat currency metrics, but by its effectiveness in accumulating Bitcoin relative to its outstanding shares. Eric Trump, co-founder and chief strategy officer of American Bitcoin, heralded the Nasdaq debut as a historic milestone in bringing Bitcoin into the core of U.S. capital markets, expressing confidence that it will advance the mission to establish America as the undisputed leader in the global Bitcoin economy. Donald Trump Jr., a stockholder, echoed this sentiment, stating that the Nasdaq listing elevates the mission of promoting freedom, transparency, and independence onto the global stage, believing it will strengthen the U.S. financial system and foster a more resilient national economy. Asher Genoot, executive chairman of American Bitcoin and CEO of Hut 8 Corp., highlighted the company's positioning to set the standard in Bitcoin accumulation. By combining Bitcoin mining, opportunistic market purchases, and the backing of Hut 8's energy and digital infrastructure, we have created a vehicle designed to drive rapid, efficient Bitcoin per share growth, Genoot remarked. This strategic backing from Hut 8, a significant player in the digital asset mining space, provides ABTC with a considerable competitive advantage. The company's business model is designed for institutional-grade exposure to Bitcoin, integrating scaled self-mining operations with disciplined accumulation strategies. This approach aims to provide investors with a reliable and efficient means of participating in the Bitcoin market. The emphasis on building America's Bitcoin infrastructure backbone signifies a long-term commitment to the digital asset's growth and integration within the broader economic landscape. And that brings us to the end of another action-packed update. We've covered Bitcoin's rally, the altcoin surge, market warnings, and a major Nasdaq debut. Don't go anywhere, because we've got a lightning round recap coming up next. Bitcoin is staging a comeback above $111K. Altcoins are outperforming with ETH and SOL seeing major gains. Analysts are cautioning about a potential $100K retest for BTC, and American Bitcoin has officially listed on the Nasdaq. That's your crypto news rundown. Make sure to hit that like button, subscribe for more, ring the notification bell, drop a comment below with your thoughts, and follow us on all social media platforms to stay ahead of the curve. We'll see you in the next one.